All right. Welcome back, everyone. I'm glad everybody was able to join the classroom session today. I'm happy to see everybody is here. Today we're going to talk about draw on liquidity, right? Um, Other than time, draw on liquidity is our second most important concept. So we have talked about time on YouTube and Discord and during our last live stream as well. Now I want to go into the second most important concept, which is draw on liquidity. So first, what needs to be understood is the two forms of draw on liquidity. Draw on liquidity is old swing highs or old swing lows or unfilled fair value gaps. We are using these to see where price is reaching for, right? So we're going to go into a couple different examples here. We need to understand that without a draw on liquidity, right, it doesn't really matter if there's a position on the screen. If there's a unicorn present, but you're unable to define what price is reaching for, then you're sitting at lower probability. You need to align yourself with time. You need to have a clear draw on liquidity, and then you need to have all of your confirmations to your entry function present on the screen during your executing times, right? So now let's go into a couple examples of this. The first thing we need to talk about, and as you guys should see, is time frame alignments, and I'll explain, where this concept plays into it with our examples. Your first time frame alignment is a monthly PD array for a daily market maker model, right? Your next one is a weekly PD array for a 4-hour market maker model. Next is a daily PD array for your 1-hour market maker model. After that is a 4-hour PD array for your 15-minute market maker model. Next is your 1-hour PD array for your 5-minute market maker model. And for everybody that's been here, you would know that this is how I conduct myself. And this is probably your most efficient way of intraday trading, right? Because the majority of these higher time frames are going to take a longer time to play out. The hourly is what I use for market structure and narrative, and the 5-minute is what I use to execute. I'm executing market maker models on the 5-minute during my hunting hours. Your last is the 15-minute PD arrays with the 1-minute market maker models. The 1-minute chart is not for everyone. I know a lot of people, show up in chat and show some 1-minute positions. This is going to be pretty noisy, right? Like price is going to be more volatile on a 1-minute chart than it is on a 5-minute chart. So that itself comes with a lot of emotions and different thought processes and psychology behind that. And you have to look into yourself to be able to know if you're capable of doing that or not. A lot of people aren't able to have the emotional intelligence to deal with that type of volatility. So then their execution and their system gets deterred because of it. Right? It's exactly why I use the 5-minute. I have no shame in saying it. To be making that many decisions every 1 minute is going to be harder than making decisions every 5 minutes. So you'll see almost all the time on my charts, I'm using 1-hour PD arrays, specifically hourly swing highs, hourly swing lows, hourly FEGs, and then you'll see the 5-minute market maker models. All right, so let's take a look at it. We are going to go over to the crude oil chart, CL, right? And we'll take a look at our first time frame alignment, right? So we'll do one higher time frame, and then we'll do the time frame that we actually execute on. But as you can see here, right? So a monthly, I'm sorry, this is on the weekly. This needs to be on the monthly. For a monthly PD array, we look at daily market maker models, right? Time frame alignment, monthly PD array for daily market maker models. We're here on the monthly chart for oil, right? And your monthly PD array that your eyes would instantly go to is equal highs right here. This is very clean. Whenever you see something that clean, it is made to be rigid, right? It's straight from ICT. That's his quote. When you get equal highs like that, it's one of the best forms of drawing liquidity. And for people that have been in the Discord for quite some time, I've been calling specifically for this level to be taken. 93.74 is what I had mentioned on crude oil. Now that it has taken it, right, we're now going to, right, we have our higher time frame PD array, our monthly PD array. Then we would go to our time frame alignment of our daily chart. The monthly chart is directly linked to the daily chart. What do we see on the daily chart? Is our model, and we'll walk right through it. And then we'll explain where the draw on liquidity comes into the conversation, right? So we are always looking for a stop hunt into our higher time frame level of liquidity, right? As you can see, we get a swing high here, and it's a defined swing high because it has lower highs on each side of it. After the swing high was created, price runs through it, causing a stop hunt, right? Now that price has ran through it, we would look for the lowest down closed candle before the leg up that took liquidity. Right here. Right? So you can see the closing price is right here. So if the screen isn't, if this isn't clear enough to see it, right? So let me just hover over the two candles. Here's your closing price here, right after the C for closing. Let's take a look. 89.66, right? And then if there was another candle that looks, closest to being the furthest down close candle before the leg up that took liquidity, you can see that this is not the lowest down close because it's 89.68, right? So we're using this candle. This is the breaker block, right? And so when you have consecutive down closes, you use both as the breaker, right? For this example, I'm going to leave it right here so we can clearly see the stop hunt, right? Because when I go like this, the one line goes away. So I just want to make sure you can see the line as well. Right? So we get the displacement through the breaker block. You also have to have an FVG aligned with the breaker block. Yes, it's very small, but it is present. Right, I'll zoom in so you can see it. Right. So at the candle closure of yesterday is when all of your concepts are confirmed. And this is what I had mentioned in analysis yesterday. For anybody that's following along with the analysis, I specifically stated, I'm waiting for today's candle closure to confirm our model. Once this candle closes, we do have a bearish unicorn. Right, so time frame alignment, we have the higher time frame level of liquidity. At the higher time frame level of liquidity, we get the stop hunt. Right, the monthly is aligned with the daily. We're now on a daily chart. You get the stop hunt. After the stop hunt, you need displacement through the breaker block. We just identified the breaker block. The displacement has to have an FVG aligned with the breaker block. Perfect. Everything is confirmed, right? So a short entry would be taken. Short is from the beginning of the breaker block. Stop is on the other side of the breaker block, right? So today you would have been triggered in. It gives the entry, and you're aiming for 2R. Now here's the part of draw and liquidity, right? And this may answer some of your guys' questions about internal versus external, right? So we need to have a draw and liquidity, or else everything that I just said doesn't matter. If price has nothing to reach for, then I don't want to take the position. Just because a position is on the screen doesn't mean it has to be executed. Have the discipline to confirm all of your concepts before pressing any buttons. As soon as you press any buttons, all of the control goes out the window, right? So make sure you do your due diligence before any buttons are pressed, okay? So now for internal versus external. An external location is a swing high or a swing low. An internal location are FVGs. Once external is taken, we could look for internal to be next. It's as simple as that. There's your bias, right? We'll have another conversation for bias. We will, I know everybody's asking for it. We need to get through all of the information, and there's a lot of it, so we're just going to do it one at a time. But there's a quick insight to bias right there. That's all you have to do. Is, ask yourself, where is price? Price swept a higher time frame, buy side liquidity. Okay, above old highs, what do we do there? We look for shorts. Okay, if we know we are external, the next thing we would look for is internal. There's everything to your bias right there. Those are the questions you ask yourself. Make sure you are doing something technical, right? Like we're not, and what I mean by that is when we are looking at price and we're above an old swing high, we are not looking for longs. That is not technical. To be longing above old swing highs, no. Above old swing highs, we look for shorts. Below old swing lows, we look for longs. And price needs something to reach for, right? So we get above the monthly swing high. We have a stop hunt that occurs at it. We get displacement through a breaker block. We have an FEG aligned with the breaker block. Everything to our entry function is present, and now looking that we were external, we need to see that there's something internal that we can move to. Unfilled FVG. FVGs are internal. Swing highs and swing lows are external. When we are looking at draws on liquidity, we want them to be unmitigated, right? So this was the very first time that price reached this monthly buy side ever since it was created. Same goes for this unfilled daily FEG here. Ever since it was created, price has yet to return to it. That is what unmitigated means, right? So price does have something to reach for. Seeing all of these concepts put together is what makes me put this in an analysis section. Anytime any of these concepts are missing, I'm not interested. I'm not going to touch it. I'm not going to put it in the analysis. I'm not even going to look at it. The moment one of our concepts are missing, have the discipline to not touch anything. Those concepts are literally the justifications to our actions. If you can't have discipline in them, then you're just impulsively acting. Right? Like we need to know what we're doing, why we're doing it, and the reasons behind it. The way we do it is having defined information. This is not discretionary, right? Like a swing high only means one thing, that it has a definition. A swing high has to have lower highs on each side of it. Period. End of story. That is the definition to a swing high. I'm not making any of this stuff up. This all comes directly from ICT, right? If you don't want to listen to it here, go and watch his entire YouTube. That's all that I've been doing for the past years, is documenting every single one of ICT's YouTube videos. And now I'm just bringing that documentation public. That's it. None of this is made up. And you're going to see examples of this happening over and over and over again. Right, so now let's go to our second example, and we will again use time frame alignment. Right, so go over here to ES, and we are going to use the daily chart. Okay, so what's the first thing that you could say about this daily chart? Very clear swing low there. Very clear swing low. Very clear that price is sweeping it. Right, so your daily time frame is directly aligned with your hourly time frame. So if we're using a daily PD array, we would look for market maker models on your hourly time frame. Let's move to the hourly time frame. Right, and again, I know I'm going to be repeating myself, but these are the things that need to be understood, these definitions, right? Look at, ever since this daily swing low was created, that it was not used during any of these attempts here, right? This is the first time we ran below this daily swing low. We want to be using unmitigated areas. Okay, now let's see what happens at this daily swing low. Okay. Let's write it out. Daily sell side there, right? Now let's go into something too that I see a lot of people making mistakes. The conversation's still going to remain on draw and liquidity, so we're going to get to it, but there's something that we need to talk about real quick, right? So we're going to look for a stop hunt. Since we were below a daily sell side liquidity, we're looking for a stop hunt, right? So when we're looking for it, right, the first swing low is right here, right? And let's even back this up so we can do it real time, as if price is moving right now. So since we got to this daily PD array, we would start to look for longs. Again, like I said, below old lows, we look for longs, right? So at that point in time, the next thing we need to do as soon as we get below the low is look for our concepts. We need a stop hunt, we need displacement, we need an FVG aligned with the breaker block. Okay, so let's look at our first swing low. Do we get the stop hunt? Yes. Perfect. The next thing we would need is displacement through the breaker block. Okay, no displacement through the breaker block, and we've completed another stop hunt. Therefore, we now have a new stop hunt, which means a new breaker block, right? So again, we would need displacement through the highest up close candle before the leg down that took liquidity. Let's see if we get it. We do not get it, but we do get another stop hunt. Now, same exact process, and this is what we're doing as price is moving. This is how we're finding our criteria. New swing low, price ran through it, new stop hunt, breaker block would be the highest up close candle before the leg down that took liquidity. Let's see if you get displacement through the breaker block. We get displacement through the breaker block. Right? Breaker block. We need to have an FVG aligned with the breaker block. We have an FVG aligned with the breaker block. We need to have an unmitigated area to reach for. Right, up here, you can see there is an FVG in a premium that ever since it was created, it has not been visited to again. Right? Like I'm not looking at this right here. Price has already mitigated this. I'm not looking here. Price has already mitigated this. I want unmitigated areas to use. Seeing that there's an unfilled FEG above, seeing that we've confirmed all of our criteria, this is something that I would use. Let's see what happens. All right, so no entry yet, no entry yet. Oh, there's an entry. See what happens. Would you look at that? Price clearly respects our entry function. We've done something technical, right? We're looking for longs below an old swing low. We are aligned with time. We have a daily PD array, and we're looking for hourly market maker models. Once we got to our daily PD array, we analyzed our entry function, the stop hunt, the displacement through the breaker block, the FEG aligned with the breaker block, and then you use the entry function how it's supposed to be used. Your entry is the beginning of the breaker block. You can see what the beginning of the breaker block is if you just hover over the breaker candle and look for the highest price of the breaker block. At the top of the screen, right next to the H, you can see it's 42.57.75. Right? So that is where I would be placing limit orders. Look, it says it over here. 42.57.75. There's an exact reason why I put it there. Because all of the information is defined, right? And this already probably hit 2R because, again, the stop loss goes right below the breaker block. So below the breaker block. Yeah, so it already hit 2R. So the objective to this position is already complete, right? So you would have caught a W here because it goes to plus 2R before it touches your stop loss. We were allowed to take this position because it has a draw on liquidity. We need to confirm these things before any buttons are pressed. If there is no draw on liquidity, right, then we don't execute. Have some discipline. I see that there's some questions in here, so now that we got through 2 examples, let me catch up to the chat so that I'm not leaving you guys behind. Will we get a copy of this in the Discord? Yeah, I could put all of my documentations in the Discord. I'm just doing it at a reasonable rate. I'm not trying to, put information overload along with the amount of questions we already have. I'm not just going to dump all of the concepts on everyone if there's other things we need to focus on. But yes, I'm going to keep presenting all of this information. I have trouble identifying the breaker block. Can you explain? The breaker block, I'll write it out here. I'm writing out both of the breaker blocks here. There you go. So the bullish breaker is the highest up closed candle before the leg down that took liquidity. And everybody keeps asking me this question, but you need to take every single word exactly for what it means. When I say the highest up closed, that means we're looking for the closing price. So the highest up closed closing price before the leg down that took liquidity. It needs to be before the leg down that took liquidity. It needs to be the closing price. Bearish breaker. Lowest down closed candle before the leg up that took liquidity. Again, closing price is important there, and it has to be before the leg up that took liquidity. Now, if there are consecutive candles to the breaker is only one thing. It's the highest up close candle before the leg down that took liquidity. The breaker is always going to be one thing. The range of the breaker will change. It will be if there is consecutive candles or not. Let me pull up an example so that everybody can see it. Grabbing the example now. It should take 2 seconds. All right, let me know if you can see. Let's see, can you see the Euro chart that is on my screen right now? Or is it still the live stream chart? Okay, it's still the live stream chart. All right, so then we'll have to find the examples. So then let's take a look. All right, so here's your first example, right? There's only one candle. It is the highest up close candle before the leg down that took liquidity. Since there's only one up close in a row, we only use one candle, right? Oh, we have the examples here already on the chart. Here's the second example, right? Stop hunt. Since this candle is the lowest down close before the leg up that took liquidity, since there is 2 down closes in a row, both of these would be the breaker block. Okay, so it depends on if it's always going to be the lowest down close before the leg up that took liquidity. But if there is 2 down closes in a row, then you use the consecutive. If there's only one down close, then you use the single. Does the internal need to be in the low time frame or the original high time frame? If you're referring to bias, we get bias from a daily, right? So you're looking to confirm your bias using internal versus external. If that, maybe I'm not understanding the question correctly, but you use the daily for your bias. Therefore, you would be looking at if we are internal or external. And when we are at each one of those locations, the bias that is created is that we're searching for the opposite side. If you are at an external location, you're looking to move internal. Okay. How internal lick would look like if we don't have internal lick to target. If we have equal lows rather than FEGs, can we target those? I think I mentioned this. as I was going through the explanations, if there is no liquidity to target, then that's just something that I'm not touching. I'm not looking to change the system. I'm not changing any of the concepts. All of the concepts are defined. The moment one of the concepts are not on the screen, then I'm just not touching it. Yes, so internal is unmitigated FEGs. External is swing highs or swing lows. The entry is not the FEG. It's always going to be the beginning of the breaker block. Stop loss is always going to be on the other side of the breaker block. TP is always going to be plus 2R. We do not use the FEG because there are instances where the FEG is a breakaway gap, right? So if you're aiming to enter on an FEG, you might not ever get filled because it might be a breakaway gap. Please do a 1 hour to a 5-minute example. Okay. So let's take a look at today's action, right? So 1 hour to a 5-minute example. So a 1 hour PD array, right? So a swing high right here. By definition, it is a swing high. It has lower highs on each side of it. After this swing high, price has never visited it until 8 a.m. this morning. So we're going to dive down into our executing time frame, but as you can see, none of these highs were used to go through this. This is an unmitigated area, right? So, and this is how I trade here, using the 1 hour aligned with the 5-minute, right? So we would mark out this 1 hour swing high, and then we would move to the 5-minute time frame. So move to the 5-minute time frame, and we will again do it as if price is actually moving. So let's mark it out. 1 hour buy side here, right? So at this moment in time, right, it's 8:15 in the morning. So I'm not doing anything anyways. I only trade after 9:30, right? So it's nothing to do here. Yeah, sure, we swept it. Doesn't matter. I'm waiting for 9:30. So we're just waiting, right? So we're just waiting. Getting close to 9:30 here, so. All right, 9:15. Now I'm going to prepare myself for the market open, right? So now that we're at the higher time frame area of liquidity, we also need a stop hunt. And as you can see, the swing high here has yet to be run through. So therefore, there has not been a stop hunt yet, right? We're going into hunting hours and we're trying to confirm our criteria, right? So we're just waiting. Okay, now it's 9:30, so I can begin to search, right? And the first thing that I see, and this is one of the most important things, is liquidity being taken at opening price. This is something that is what makes a unicorn, is the time element. The unicorn itself is not just a pattern. The unicorn has elements of time. And I've specifically put this quote out there multiple times. And I'll put it out there again. It comes directly from ICT, right? Here you go. The breaker is one of the strongest algorithmic entry patterns, especially if you have taken out liquidity at opening price. Opening price for indices is your New York Open, right? So now we have our stop hunt. We have taken liquidity at New York Open, right? Let's make sure we understand time, right? We have a 10 a.m. driver, so I'm not looking to place myself in front of that 10 a.m. driver. I would wait for this 10 a.m. driver to occur, right? So, oh, wrong chart, wrong tab. Back to the chart. We just saw the driver at 10 a.m., right? We are at an area to be looking for shorts. We are above an old swing high. We are aligned with time because we're using a 1 hour PD array. And at that 1 hour PD array, we got our stop hunt, right? So our first criteria to our entry function has been confirmed. Understanding the importance of time, we still need to wait for 10 a.m. because of the driver, and we still need displacement through the breaker block that has an FVG aligned with it. Since we got the stop hunt, we can mark out what would be the breaker block. We are using the lowest down closed closing price down closed candle before the leg up that took liquidity. Since there's only one consecutive down close, right? The one before that is a green candle. I know mine are gray, but this is an up close, this is a down close. Since there is only one consecutive candle, we only use the one as the breaker block. Okay, so now we have it marked out, but we still need displacement and an FVG aligned with it, and it needs to be after 10 a.m. All right, so we're just waiting. All right, just waiting. Here's 10 a.m. Right now that the importance of time has occurred, I'm interested. Right, I'm interested in executing. We went above an hourly PD array. We are aligned with time. We're using the 5 minute for executions. We got our stop hunt at opening price. We're now getting displacement through the breaker block, but we need to have an FVG aligned with the breaker block. So we have to wait one more candle. We now have all of our criteria confirmed. We have aligned ourselves with the time frames. We've aligned ourselves with time from the high impact news driver, and all of our concepts to the entry function are completed. This is the very first moment in time that you can be placing a limit short, right, at the beginning of the breaker block. So the beginning of the breaker block is the lowest price of this candle right here. 42, 67, 75. Right, so it would look like this. Stop loss goes on the other side of the breaker block. We aim for 2R. Right, so all of these are limit orders. At this very moment in time, I'm pressing limit short at 42, 67, 75. I'm pressing limit stop loss above the breaker block. I'm pressing limit TP at 2R. Now that I've pressed all of the buttons, you sit and wait. You do nothing. As soon as any of the buttons are pressed, you have lost all control. Do all of your due diligence before any button is pressed. Right? So now let's see what happens. Boom. The very first opportunity to get an entry, you just got one. You are filled for a short position. Right? It touched the beginning of the breaker block. You are filled in a short position. Now, there's no emotions to have here. At this moment in time, you are sitting there saying, I've already accepted the risk. That's why I did all of my due diligence before I pressed any buttons. And now there are only two outcomes. I am either going to go home with minus 1R, or I'm going home with plus 2R. No ifs, no buts. There's nothing in between. It's one or the other. Let's see what happens. Okay, that might make you feel scared, right? You see that big wick and you're like, oh my God, price is bouncing. No, there's no emotions to have. Neither your stop loss has been tagged, nor has your take profit. Nothing's happened yet. There's no emotions, mental, psychology to have there. Nothing has happened yet. We don't know, right? This has not been invalidated. It has not been proven correct. Therefore, we just don't know yet. We're just sitting and waiting. Let's see if that was TP. There you go. So if you were scared out of your position because of this, what looks to be a bounce, go figure it's not a bounce. If you were too emotionally driven or emotionally impulsive, you just left plus 2R on the table. The next candle gives you your profit. If you tightened your stops because you were too scared to be in the position, you probably got stopped out at break even and you left 2R on the table. There are only two outcomes. You either take the profit or you lose. The risk is accepted before any buttons are pressed. There's your example of time alignment, right? New York Open, our entry function, right? You have it all here. And now to look at draw and liquidity, you have multiple lows here. So here are some, this is what's called a low resistance liquidity run. When you see low resistance liquidity runs, this is good. You want to see on the other side of the curve, you want to see low resistance liquidity runs. Price cuts through low resistance liquidity runs like a hot knife through butter, right? Like that, we want to see these failure swings, and go figure, price goes directly to the failure swings. One of the best draws on liquidity, other than an unfilled FVG. All right, so there's another example there of time alignment using your higher time frame PD array, then getting on your executing time frame and looking for all your criteria, being aligned with your opening time and defining all of your criteria to get into a position. Once confirming a position, entry, stop loss, TP, execution, management. Now at this moment in time, do not touch anything else. Once you get green, you stay green. This is the exact reason why I only take one position a day and maximum 2 a week. There's zero reason to overtrade. There's zero reason to hand back everything that you just did, unless you're being impulsive. Let's get through some more questions, and then, so I'm not going to stay on here long. It's already been close to an hour. Usually I do the streams for between an hour to an hour and a half, so we're going to keep it that way. If I get to your question today, I'm glad to go over it. If not, please just send the question again in the general chat, and I'll do it over text instead of voice. But let's get through a couple more questions, and then I'm going to wrap it up. Let's see, where were we? Please do an example of 1 hour to 5 minutes. So that's where we were. Could you use 1 hour bearish order block as an internal draw? Yes, you can. There's nothing wrong with that. That's just not a part of my system. I'm not going to sit here and say what is right or wrong. What I'm doing is documenting my system publicly. I'm showing everybody what I do each day. So yes, other people use unmitigated order blocks as a internal draw. I just don't for my system. To confirm a breaker block, you need displacement through it, but do you also need a close? You do not need a close below. Price either goes below it or it doesn't. It could just be a wick. It could be a closure. But there is insight to strength versus weakness. If price closes nicely below it, that looks stronger than if it's just a wick. Amazing work, crystal clear explanation. Thanks, man. I appreciate it. We will be doing this every week. So for the people that are around, you will get more and more learning opportunities. The YouTube series is there. The documentation here in the Discord is there. The Twitter documentation is there as well. I will be trying to provide as much value as possible every single week. Would this unicorn be valid because the last sell side sweep was around London session? Referring to CL example. Are you talking about the daily example that we were looking at? So I'm not. Is this the daily example that you were referring to? I'm sorry, the question just wasn't very clear, so I'm a bit confused. Would this unicorn be valid because the last sell side sweep was around London session open? Referring to the CL example you walked us through earlier. So this is buy side liquidity. If you know, so I'm very confused by this question. This is a short, so the sweep of the liquidity was buy side. So it type that question out to me in the general chat if I'm just not understanding it. Maybe it's because of the terminology, but this is buy side. Old highs are buy side. That was the sweep. The sweep was during Thursday. While we're trading 1 hour unicorns and considering kill zones is not important. Kill zones are very important. Time is the most important element. We always consider time. We do not touch anything outside of the hunting hours. Time is literally our most important element. Example of bullish and bearish breaker. We did do an example of bullish and bearish. So if you were here watching, you got both examples. Isn't that displacement across the BB too shallow? When do you consider displacement to the breaker block? I think that might have been the question I also just answered there, is that it's insight versus it's insight for strength versus weakness. As soon as price crosses the breaker block, right, that's a market structure shift, right? So we're looking at CL again. Just because this is a wick and not a candle closure, it's still a market structure shift. It still went through the breaker block. It's just insight versus strength versus weakness. This looks weaker because how it was indecisively closing above the market structure shift. If we got a strong candle closure that was energetic and closed all the way below the breaker block, that would look much stronger than it did here. No matter what, it is still a market structure shift. As soon as price crosses that point, it is a market structure shift. Let's see, if an FEG is partially above the breaker, do we put the stop loss above the breaker or the FEG? I always use the breaker. I always use the breaker for my entry. I always use the breaker for my stop loss. That part will never change. What if somehow we get a wrong bias and start looking for a bullish BB? How would we know that we were wrong at some point? Price is not going to respect the breaker block. If price runs right through your entry function, that's it. That is what invalidation is. Right? Like, and make sure your stops are in place. That's why we use stop losses. When you are wrong, do not. Losses need to be as small as possible. You need to be overly impatient with losers and very patient with winners. So anytime you are wrong, accept it. Can take stop hunt of the 24th high. 24th high is. There is no 24th, so this one's confusing me too. You're probably referring to Friday the 22nd of that sweep. But no, I would not use that as a stop hunt. That, right, the swing high is here. Also on ES, would there be a long on the M5 based on the fact it comes from the hour 1 FEG? No, the higher time frame is used for narrative and market structure. You need to confirm all of the criteria to your entry function on the executing time frame. You don't have a long position on the 1 hour and execute it on the 5 minute. Your entire entry function and all of the criteria to it needs to be confirmed on your executing time frame. What do you recommend studying outside of market hours? Would it be going back to historical data? I advise working on health, spending time with family, maybe working on psychology. You don't want to get burned out. Like your relationships and your mental health is way more important than any of these charts. Your family is way more important than any of these charts. So come during live market hours so you can get the real live experience of real live price moving. Forward testing is the best experience. And then once you've gained enough experience through live data, that's when I would start to move forward. But outside of that, I would be spending time with family, working on health. Make sure I recharge my battery so that every day you can show up nice and sharp. Can you show results of this model historically if you did some backtesting? I don't think that's a good idea because each individual is going to be contingent upon their own, abilities in the market. I don't think there is a one set data results from this model, right? Your results are going to come from your abilities to execute it. I don't think my results are going to be the same as your results, is what it comes down to. Can we watch a replay of the stream? Yes. I recorded the stream, so I will upload it later, and it'll be put into the stream archive. So for anybody that wasn't around for it, they will be able to get to it. What I don't understand in the CL example is that we took external on the daily. We took external on the daily, leaving the small FEG above unmitigated. Why aren't we targeting internal? So we are external. So first of all, we're external because if you're using your time alignment correctly, right, your external buy side liquidity, and I pulled it up on my chart here. We were external because we went above this monthly swing high. For time alignment, you use monthly PD arrays with daily models. Since we went external on the monthly, we would then look internal. Right? So you can see that prices, we'll go back here, right? So internal, external here, and look for internal here. All right, so we went external on the monthly, so therefore I would look internal after that. I think it's the time frame alignments that are maybe making the misunderstanding there. All right, so, and maybe that's what needs to be said. We're not looking external on the monthly, but looking internal on the daily. So maybe that's what needs to be said. So a higher time frame external liquidity run does not equal a lower time frame stop hunt. They are definitely two different things. Yes, they are definitely two different things. You can have a higher time frame external liquidity grab and not have a lower time frame stop hunt. Those are two different things. You want both of those things to happen, right? So that is another ICT quote, right? And I've written that one down as well. You want two forms of liquidity. The best breakers are going to occur when you have two forms of liquidity grabbed: the higher time frame and the lower time frame. The higher time frame is that higher time frame level of liquidity, and the lower time frame is that stop hunt that we're referring to. Do you use the strategy only for equities or Forex as well? I use it for any trading, any and all trading. This is the model that I use. Equities, Forex, crypto, commodities, anything. This is how I conduct my trading. So we're a little bit over an hour now. I am going to wrap it up here. I understand that there are more questions, but I'm not able to stay on the stream for hours on end. I do have to get other things accomplished. I do really appreciate everybody showing up. If I did not get to your questions, put the questions in the general chat and we'll continue the conversation there. I really hope this helped. If there was any misunderstandings, we can, again, just continue to go over this information. We just need to continue to strive to learn. Like, let's just have patience, continue showing up. More executions, more experience is going to provide further conviction. The more times you do this, the more muscle memory you're going to achieve. So keep showing up, keep asking questions, let's keep going over the information, whether it's today, tomorrow, next week, the month after that, the year after that. We've been doing this for quite some time. So again, if I missed any questions, throw it in the general chat, I'll get it there. For anybody that misses this stream, I will upload the stream for everybody to rewatch on their own times. I hope everybody has a great day. It was great talking to you guys. Thank you guys again for joining. And we will set up the next classroom session for next week. I'll put in the announcements section asking when we should do it. So be on the lookout for that. And I hope everybody has a great day. Thanks, guys.